Hello guys, welcome back to my YouTube channel. In today's video, I'm going to be showing you guys my A plus model trading setup. So imagine having a trading setup that is so precise that it feels like the market moves for you. A strategy with complete high win rate, no guesswork, consistent profit. This is my most reliable trading strategy and it offers me profitable setups up to date. So I don't do any guesswork about it and everything is completely aligned from scratch to finish. All right. So this is A plus model. It focuses on high probability setups by identifying key market structure, precise entry point, and optimal risk to reward ratio. So stay tuned and watch the video to the very end, because at the end of this video, I'll be showing you guys my A plus model setup and I'll be showing you live trades which I took with I and my VIP members. So in this video, we're going to be looking at the most reliable trading setup, how to figure out only the A plus setup, and how to identify a precise entry and exit rule without guessing. All right. So how to trade with absolute confidence and how to trade the market using the A plus model. So now, for you to be able to trade this setup completely well, you have to actually start your analysis from the daily time frame down to the 4 hours time frame, the 1 hour time frame, and the 5 minutes time frame. Remember, the daily time frame, the 4 hours time frame, the 1 hour time frame, and the 15 minutes time frame for entries. So we use those four time frames for the A plus model. All right. So now what we're going to do, we're going to be looking at the daily chart. All right. We try to identify our swing point. So what we want to do is we want to identify our swing point. Now that we have our high. Okay. So now what is here is we have our swing point where we have the low of the market and the high of the market. So this is our swing point. So we want to be buying from this low and want to be selling from that low. So now when the market gets to this area, what do you want to do? You want to be looking for the A plus model setup. Okay, we want to be looking for that A plus model setup to buy to the discount area. All right, you buy from premium and then you sell at a discount. At the discount level, you look for the A plus model setup. All right, and then you sell. So now what we're going to do is you look from this either on the high time frame and then you step down to the lower time frame for entries and for confirmation to get your precision right. So now let's go back to the step index chart. So now we're going to start from the daily time frame. Now let's go to the daily time frame, but before that, let me just delete what we have on my screen right here. So we start from the daily, which is our 24 hours. The 24 hours, so that we can be able to identify the trend of this market. So from the trend of this market, we are seeing that this market is strongly bearish and we just broke out these swing lows of the market. So right now, I'm actually looking at for sell continuation and I'm thinking this market is headed down here. So from here, I'll look for my A plus model setup to buy all the way back to that area. So the market is heading to the discount. We have our premium on the daily time frame at that area. So that's our premium, and then this is our discount. So the market is actually entering into our discounted area so that we can actually look for our optimal trade entry model. So we are looking for optimal trading model within this demand zone right here. So from here, we'll be looking for potential buy setup. So right now, all we have to do is to scale down to the hourly time, the 4 hours time frame, and look and see what the 4 hours time frame is actually doing. Is this something that actually supports us to actually buy? Now we look to the left. Do we see anything really important that we obstruct this price action? No. but rather we see something that is in alignment with what we saw on the daily time frame. So right here you can see that we have what, a sweep, liquidity sweep. Okay, so we have a liquidity sweep right here. So we have a liquidity sweep right there, and then we have our break of structure to the upside. So now this is our break of structure. We just go ahead and mark that out. So we have a pullback which provides our structural liquidity. All right, I'll just be up giving you guys the A plus model in a sec. So for now, just stay tuned. So right here you see this. So now let's look at this. All right, the A plus model setup. All right, so for the A plus model, for this strategy to actually hold, all right, first you must consider that the market must be in a downtrend, and then there must be a sweep of liquidity. That means stop loss hunt or stop loss grab. Now the stop loss, that is the buy side liquidity has been taken out, and then the break of structure leading to the sell side liquidity being taken out, and then the pullback to provide structural liquidity. But in this particular case, we'll be using this structural liquidity that is actually closer to our POI. So this internal structure is what we are going to be using. So let me just go ahead and just grab this. This is far better because it extends to the current markets area. So now this is our structural liquidity, all right, because that is where we are going to be considering buying from. All right, so now since everything is clearly aligned, now we just gonna wait for the market to actually come grab the liquidity below that area. Right here we have our second break of structure that actually what validates this trade. So we have our second break of structure, which is clearly clear right there. All right, we have our second break of structure, which is very clear and obvious, and anybody can actually identify that. So now let's recap. So for the A plus model to be valid, there must be what, a sweep of liquidity, there must be a break of structure, and then there must be a pullback to provide what, structural liquidity. This structural liquidity is in that whenever the market comes back, the market have liquidity to actually take the forward, pushing to the upside. So now we have, and lastly, there must be what, a second break of structure, and then the structural liquidity must be swept. All right, so there are 6 rules. The first is the sweep of liquidity, second is the break of structure, third the pullback to provide structural liquidity, and then the fourth is the second break of structure, and then the fifth, I think, the pullback to sweep the structural liquidity. So now let's look at the current market situation. All right, so now looking at this, now we're actually looking for continuation patterns using the same model to actually target those structural liquidity. But I don't want to be aiming too high. I just don't want to be greedy. I'm just trying to go for my 1:8, 1:9 risk to reward ratio. But I know where this market is headed, so that provides what, clarity, simplicity, and what improves the probability. I won't put certainty because everything is still a probability in the trading space. So now looking at this right here, what can we see? Right, we try to identify. Let me just delete the whole of this. All right, so right here you can see that this market has actually what provided a sweep here. That's a false break taken out of those lows. Okay, and another thing is it has lured buyers into buying into the from this area before actually taking their stop losses. All right, and then we have a sweep here of this high, which is the sell side liquidity being taken out. All right, so now we have the sell side liquidity being taken out. So now if we are to modify this a little bit with the smaller time frame perspective, now you can see that there's a sweep of this word high here, which is a sweep of liquidity. Yeah, that was the last high before it went down to that extent. So now we're just going to go ahead and mark that, label that to be a sweep of liquidity. All right, so since that's a sweep of liquidity, we need at least a break of a recent low before the sweep. All right, so now we look at here, we have a break of this low here, so that gives us what? A break of structure. So this is a break of structure. That means this is in alignment with our overall higher time frame, the daily time frame, the 4 hours time frame. So now we have that break of structure. The next thing we're actually looking for is a pullback. So this pullback provides what? Structural liquidity that the market will come back to actually what? Hunt. All right, so looking at that, we have our structural liquidity, and then the next thing is that second break of structure. So I might consider this, but I think I'll prefer this. All right, so we have our second break of structure because this is more clear than the previous one. So we have a second break of structure, which makes this trade actually valid. So now we're going to mark out our protected high, and then the next thing we mark out is our PY. PY stands for a point of what? Interest. So we're just going to go ahead and mark our PY. I can step down to the 5 minutes time frame to modify this, but I think we don't actually have so much time, luxury of time on our side. So now this is absolutely clear. So we're just going to be aiming for this lows, for the market to take out those lows. So that's to give us what? Our great risk to reward ratio, still 1:9 if we use our confirmation entries. So this is actually simple. Anybody can actually do this. Don't forget to hit the like button, subscribe to this YouTube channel, and follow us for more videos like this. Let's look at one more example. Now we're just gonna go to the VIX 101 seconds here. So now on the VIX 101 seconds, there are some reasons why I'm actually considering this particular trade. So now let's look from the daily time frame perspective. We'll start our analysis from the market breakdown from the daily time frame, and then we scale it down. So now on the VIX 101 seconds, you can clearly see that the market has actually been breaking structures for a very long time. So the market was previously on what? A trending phase. All right, so it was on a trending phase, as you guys can see, and now we are what? On a downward phase mark, where the market is actually breaking lows to the downside. We have high lows, high highs, and so on, low highs, and so on. So now let me just delete this so that we focus on the current market trend. So right here, you can see that what happened if you follow the trend line price action. Okay, just to get a deeper insight, you'll be able to see that we have accumulation, and then we have expansion, and we also have this accumulation right here, and now we have our expansion. So I'm expecting this market to actually go a bit further up to taking out this this area right here before we can actually have a pullback. All right, I'm expecting it to go a little bit further before we have a pullback to be able to touch this this particular line. All right, so I would just scalp. Then whenever I pull back to, let's say, 50% of its move, all right, let's look at where 50% is going to be like. All right, so we're just going to go ahead and mark that. All right, so whenever I touches that area, okay, so I'll wait for a 50%. So the 50% is going to be somewhere there. All right, so 50% is going to be somewhere around here. All right, let me just go ahead and mark that. So I will wait for it to get to that area. Then that's my discounted price. So from that area, I'll be looking to get some more sales. So now let's scale down to the hourly time frame. That's from the daily time frame. If the market gets there, I'll look for a setup to actually continue that sell. So now let's go to the hourly time frame. All right, I was supposed to step down to the 4 hours, but let's get to the 1 hour time frame. All right, so now on the 1 hour time frame, these are zone. Okay, we'll be looking for sales, okay, for the sales, but right now let's focus on the short-term sales. So like I said, we are looking for what if we are looking for the optimal, the A plus model, the optimal trade entry model, right? The A plus model where everything is well aligned. You don't have to do any guesswork. So this strategy fall in line with our current model, right? So now we're just going to go ahead and mark that out together. I just want you to take a screenshot and then try to do it yourself before we do it. Let me just give you a few minutes. So now let's just progress and proceed. Okay, so right here we have what is sweep of liquidity, okay, which is, it's very clear, it's very obvious. All right, so we have a sweep of liquidity and everything aligns with what the current market trend, which is the bearish trend, right? We don't do no guesswork. So we have a break of a sweep of liquidity, which is right there, it's marked. So now we wait for a pullback. So sorry, we wait for a break of structure. So right here we have this low. Okay, there was a break of that low. All right, we have a break of that structure. All right, so now we have that break, and then we have pullback, which provides what structural, what liquidity, and that must also be taken out. So this provides our structural liquidity and it must be taken out. So the next thing is we mark our POI. Our POI stands for our point of interest. So we can use the order block. Okay, so in this particular case, we have a well-defined and detailed order block right here. So this is a very clean setup, and it's a very high probability setup. Okay, so now we have our everything marked, and lastly we have our second break of structure. And this is very sweet because even that this low has also been taken out. So if this low wasn't taken out, I don't think I will actually be interested in this particular trade. So this low has been what? Taken out. Let's mark it out. So the low has been taken out, so which makes this trade a very high probability setup. So the next thing we look out for is for the market to actually what? Sweep the structural liquidity and then tap into our POI. So we wait for the market to actually get to that area, then we are going to sell all the way to the downside. So you can actually risk as much as you want, because this is what a very high probability setup, because everything aligns with what the trend. Remember, that is not a trading advice, guys. So but you can just do with it as you please. So this is a very high probability trading setup, and everything aligns. This can give you a 1:10, 1:20, depend on how well you can actually execute your trade. So that's enough. Don't forget to hit the like button and subscribe to this YouTube channel for more and more videos like this. So stay blessed.